A golden cross completes on the daily chart, but Bitcoin still has to contend with a death cross on weekly timeframes. Bitcoin, BTC, lingered near $23,000 on 7th February as a key chart phenomenon hit for the first time in 18 months. Data from Cointelegraph Markets Pro and TradingView showed BTC/USD tracking sideways overnight, having shunned volatility at the week's first Wall Street open. While failing to flip $23,000 to support, the pair nonetheless saw a potentially significant event on 6th February in the form of a golden cross on the daily chart. This refers to the rising 50-period moving average crossing over the 200-period moving average. The last time that this occurred on daily time frames was in September 2021, 2 months before Bitcoin's latest all-time high. Some crypto analysts have keenly watched the cross, with venture founder, a contributor to on-chain data platform CryptoQuant, arguing that $25,000 could reappear as a result. Bitcoin golden cross just happened. He summarized in a Twitter reaction. This potential correction could see BTC retest $20,000, 200 DMA and key support, then in the bullish case, test $25,000 next. Make $25,000 support, and it's nail in the coffin for the bears. The picture remained complicated on the day thanks to an upcoming counter cross on weekly timeframes, where the 50-period moving average remained on course to drop below the 200-period one, a phenomenon known as a death cross for its conversely detrimental impact on BTC price action. For on-chain monitoring resource material indicators, it remained uncertain whether the golden cross alone could propel BTC/USD higher. Whether it's enough to get a legit test of the $25,000 range remains to be seen, it wrote in part of a commentary on the Binance order book. An accompanying chart showed major resistance in the form of ask liquidity stacked at $23,500, the first major hurdle for bulls to overcome in the event of a move higher. Another factor on the radar for 7th February came from comments from the United States Federal Reserve. Ahead of next week's macroeconomic data prints, multiple Fed officials were set to speak, with Chair Jerome Powell's words expected to be the most significant regarding market-moving potential. Nothing special this week, the only key factor to watch is Powell tomorrow afternoon. Perhaps one more sweep for correction, and then the party should continue rallying upwards, part of a Twitter analysis by Cointelegraph contributor Michael Van de Poppe stated on 6th February. Van de Poppe added that buy the dip might be an appropriate option on altcoins in the meantime, as material indicators noted was already the case with Bitcoin whales. The views, thoughts and opinions expressed here are the authors alone and do not necessarily reflect or represent the views and opinions of Cointelegraph.